the October numbers that have been released, you mentioned that the U.S. economy is continuing to exhibit good momentum. There were 261,000 jobs added in October. So put that into perspective for us. What does that mean for the overall economy?
Well, that was a nice bounce back, Susan. We saw a dip in September, originally reported around 30,000 or so dip. And so we were expecting to see a bounce back in October because of the impact of the hurricanes, especially in Florida, hitting right before the job data was collected. So even though the 261 was a little bit less than consensus expectations were over 300,000, I still call that a win, and I still call that clear evidence that the U.S. economy is growing past the storms. The impact of the storms, while very destructive, of course, to the specific areas, to the overall U.S. economy, I think we're well past that, and I think full speed ahead through the end of the year.
Okay, so some of the industries in particular, construction employment gained 11,000 jobs, manufacturing 24,000 jobs, wholesale trade added 5,700 jobs. What can we take away from these particular industries growing?
Well, the manufacturing numbers were actually stronger than expected. Normally, at this part of the business cycle, we would expect to see a resumption to ongoing losses in manufacturing. It's a high productivity growth industry, so even though output can be expanding, jobs can actually be shed. We're not seeing that now, of course. We saw a nice gain, and that really speaks to the strength of U.S. manufacturing, and that shows up in other data like the ISM manufacturing report.
While we are seeing job growth, we're not seeing growth in terms of wages. Can you break that down for us?
You have to account for the fact that something on the order of 10,000 baby boomers a day are retiring. And as those jobs are being filled by millennials and Gen Xers, they're probably getting a raise, but not as much as what the baby boomers who were retiring were. So if you count individual millennials through their careers and Gen Xers, their wages are going up somewhat faster.
What does all this mean for their potential rate increase next month?
So this is pretty much well on everyone's radar screen, and it would be an absolute surprise at this point if the Fed did not raise rates on December 13th. So there's another way of saying that the burden is on the Fed now to say they won't do it because everyone is expecting them to do it. And so the absence of commentary by the Fed says they're on board, it's a green light for December. And now we're starting to look beyond December and think about what the Powell Fed may do next year.
All right. Well, thank you, Robert. If you would like to subscribe to Robert's reports, just go to comerica.com/economics.